I will tell you how to become rich. Close the doors, be fearful when others are greedy. Be greedy when others are fearful, said by Warren Buffett. Good afternoon to one and all present here. I, Divya Shinde, a first year MBA student, on behalf of PCTS, S.B.PATIL Institute of Management, welcomes you all for today's guest session on on financial market operations and share market trading. It is a movement of a great pleasure for me to welcome today's guest speaker, Mr. Avinash Vikram, before the session. I would like to thank Pimpri Chinchwad Education Trust on BLA, our beloved director and faculty members for giving this beautiful opportunity. I am proudly overjoyed to take the opportunity to introduce our guest of the day, Mr. Avinash Vikram, Associate Professor, Faculty of Business Administration and Commerce. Sir has completed Bachelor's of Commerce degree from Vikram University, post-graduation diploma in computer application from AISECT, Computer Education, Bhopal. MBA from Devi Ahilya University Finance as major as marketing as minor. Sir is pursuing a PhD from Mansoor University. Sir is a finance professional with a proven 10.5 years track record of accomplishment in industry and academics. During his journey, he is accountable for business development, relationship management, client servicing, students development. Sir is associated with internal counseling for admission and associate examination center superintendent. Sir has coordinated with content development for course curriculum, student research work, paper setting, examination copy evaluation, and academic responsibilities within the organization. Sir has extensive background in providing training and development in financial sector including stock market, insurance, banking, retail sectors and Google tools. Mr. Avinash Vikram is recipient for various notable awards and accomplishment of name a few. Sir has awarded for best paper in international conference on prospect and challenges faced by industries in a changing environment on Feb 16, 2020. Sir was coordinator of 2 days workshop on basis of banking and associate terminologist, which was organized by the Faculty of Business Management and Commerce. Sir has provided training to students on banking and accounting, module led by the Ministry of HRD in the name of Vocational Training Program. Thank you.
Now I request Avinash to kindly guide the students on the today's topic.
Sure. Thank you, students. Thank you, Dr. Maheshwari and the director and the management of the S.B. Patil Institute. It's a good opportunity for me to interact with the MBA students. I hope I am audible properly.
Yes, sir.
Yes, sir. Yes, sir.
Okay,
Yes,
sure.
sir.
So it's a very good platform that in this COVID period and this lockdown period, we got an opportunity that you will be interacting with X and Y faculty members from around the world, right? So it's a very good thing for all of us that we all are interacting with each other. And today's topic, that is a very good topic, and I hope that yesterday you have seen the budget also, right? So that budget is also the positive side aspect that is reflected in the stock market also, and today's topic is also related with the same, right? So I hope that our next 2 hours will be very interesting for all of you. So just wait, I am going to share my screen to all of you. Just hold for a second. My screen is visible properly.
Yes, sir.
Yes, sir.
Okay, yeah. So when we talk about the financial market operations, right? So the first thing comes to your mind is financial market means the market which is give you your finance, right? So the question arises here that what is this financial market? What kind of a juggling is there? The what financial market, share market, everyone is saying that share market is going up, share market is going down, but exactly we don't know that what are the basic fundas behind this stock market and the financial market. So just I am give you a layout definition who will go to the conclusion of the share market, that how a journey can happen from the 0 to the 100, right? So first thing we need to understand about this market is what is financial market. First thing, very first thing and very common thing, whenever we talk about the market, the first thing comes to our mind is that there is a buyer and seller. So exactly, you are right, buyer and seller is there, but what is this financial market, what we are getting there? So the financial market in simple terminology, when you talk about, then when anyone ask about you that what is financial market, the simple layout meaning is the market where financial securities or commodities can be traded, can be buy, can be sold. This is called the financial market in a general layman language. But when we talk about that what are the basic fundas about the market, so we need to understand in a deep manner that what is financial market. So if the basic funda, that a place where the entities can trade in a financial securities, now the question arises, who are the entities? Entities can be the individual like you and us, like an organization, like a bank, like corporate houses, like financial institutes. Anyone can be the part of this financial market. And the second thing is, in this financial market, there is a chances of getting a low transaction cost, because the simple example, if you are purchasing anything in an online market, definitely you will get a reasonable rates as compared to the physical market. That's why this online market is growing on a boom. The simple funda is that in a financial market, you will get a low transaction cost because there is no need to go in a physical form. First thing. Second is that a place where prices are reflected by demand and supply. As you are a student of first year MBA, so you are going through with the economics, and in a market there is a one funda work, there is a supply, there is a demand, right? And they both works, and the result is reflected in the prices of the product. The same way in a financial market, the prices are reflected by the demand and supply. When demand is high, the prices goes high. When the demand is less, prices goes down. General funda of a market. Second thing is, when we talk about the securities, so securities includes that shares, bonds, commodities. Shares means the amount of that requirement that is required by the company. Basically, if you are going to set up a company, you need money, so you are going to issue a shares. So that is the funda of basically shares. Bonds is usually issued by the government. Yesterday in budget, that insurance IRDA is going to issue a bond, right? Insurance bond. So that bond is generally issued by the government companies, right? And the commodities. Commodities, whenever we talk, that commodities includes metal commodities and agri commodities. Metals, that means gold, silver, crude oil, and the agri commodities like your soybean, gram, potato, everything is comes under the commodities, right? So that is the combination of financial market. Now when we go beyond this financial market, why this financial market is working, that is the flow of money. Like one side we talk about the households means like you and us, and the other side is the firms, business, organizations. And in center there is a financial market. As you can see in this picture, in the center there is a financial market. Household is going to the financial market. Why we are going to the financial market? Because we have some surplus amount. Every household person, every individual who is having some earnings, he wants to invest some amount of savings into some sector. It's not compulsory that you have to invest in a share market only. There is a variety of options. You can invest your savings in share market, you can invest in your bank fixed deposits, you can park your funds in a saving account, right? So there are n number of options where you can save, but you have to go into the financial market. Like if you want to buy a vegetable, so you have to go in a vegetable market. The same way, if you want to invest, if you want to save your money, you have to go to the financial market. The simple funda of this financial market. When you invest your money in financial market, then the other side of the market, there are the firms. Here it means that the corporate houses, business houses, companies, they required money, so they borrow money from the financial market. They need the funds, so they generate the requirement in financial market. So from financial market they get funds. And the medium is that the capital expenditure on goods. Here, the upside of the diagram, you can see the government. Here, the government is collecting taxes and providing wages, salaries, pensions. So, whenever we are saying that government is giving you pension, government is giving a salary, so they are not giving from their own pocket. They take money from your pocket and then provide money same to you, that this is the funda. The same way, from the corporate houses, government purchase goods, government collect the taxes also, right? So this is the flow of money in the financial market, how money can be rounded in a financial market. Now when we talk about this financial market, what are the basic functions? So the functions is, first function of a financial market is price determination. There are n number of instruments, like for example shares, commodities, right, bonds. So they have to determine the price of the particular commodity, particular shares, particular products. So this is the function of financial market, that on the basis of demand and supply they determine the price of a particular shares or securities. Another function of the financial market is the fund mobilization. Fund mobilization, we can relate this fund mobilization with the economic development of a country. If in any country there is a proper mobilization of funds, that means the flow of money from the investors to the borrowers, it's when it should be proper, then the economy will be growing in a proper manner. The same example we can take of India. In India there is a COVID cases, right? From, we can take an example from the first COVID case, that is March 2020, right? So from that the market boom, growing on, and the today's we are going to touch on a 60,000. So this is the growth. Country's situation is, we know, we understand the country's situation, but when we talk about the economic condition, the mobilization of funds, so the country is getting proper mobilization of funds. Companies are getting funds through the market. People have their funds. They invest in a market. So this is the proper mobilization of funds, and that's why our economy is going on a good direction. So this is the direct advantage of mobilization of funds. Second is, sorry, third is that liquidity. The role of this financial market is providing in a liquidity. Like for example, if you buy a land or you have some property and you want immediate cash, you cannot sell that property in on an immediate basis because it takes a time. because whenever you invest your money in a real estate sector, it cannot provide you real-time liquidity. But in case of a financial market, you need money, you can sell in a fraction of second and you get a liquidity in your hand. Liquidity means whenever you need a requirement of cash, the particular product can be converted into cash within a fraction of second. This is called the liquidity. So the financial market provides you the liquidity also. So this is another function of the financial market. Next important function is that risk sharing. Risk sharing means, say for example, if I have a surplus of fund of 1 crore rupees and I want to invest this 1 crore. So what I can do, I can go in somewhere and I purchase the property. Might be after a few period that property has blocked my funds, might be the rate has been reduced, anything can happen, so there is a risk. But when we talk about the financial market, in financial market there are variety of options are available to you, variety of investment avenues with you. So on the basis of this, you can manage your risk by the diversifying your investments. Say for example, if you have a 1 crore rupees of your fund, so what you can do, you can invest some amount in your shares, you can invest some amount in your bank fixed deposits, you can invest some amount in your gold, silver. So this is the way how you can take an advantage of financial market and you can manage your risk, so that if the share market is down, so you can get money from the bank or you can get money from your gold and silver investment, so you can manage the risk. That is why the function risk sharing is associated with the financial market. Next important function, that is easy access. Easy access means that whenever you want to buy and sell anything, you can directly access to the financial market. It's easy to reach and anyone can reach to the market. This is the best advantage of a financial market, that there is not to be depend on anyone. You can directly go to the market and you can directly transact through the market. This is the best advantage and best available function of a financial market. Then next is reduction in transaction cost. Whenever we talk about buying and selling of anything, the first thing comes to our mind is how much transaction cost is there, right? Transaction cost means the cost which is extra apart from that particular price of a commodity. That's called the transaction cost. So whenever we talk about the financial market, it helps in reducing the transaction cost. In simple, I give you one example, that if you want to transfer 5,000 rupees to your friend, what you can do, you can just simply pick your mobile, open a Google phone, Google Pay, type a mobile number and just click 5,000 rupees pay. Just simple, there is no transaction cost. But when we talk about the earlier time period, the you have to go to the bank, you fill a form, you have to stand in a queue, it takes a lot of 2 to 3 hours, then your friend will get amount after 1 or 2 hours or maybe 2 or 3 days. So this is the transaction cost. You are going to the bank, you are investing your time, you are investing your petrol expenditure, everything. This is the reduction in transaction cost. So that is the simple example. The same applicable in the financial market. If you want to buy shares, if you want to buy fixed, you want to do fixed deposit, where you are going, you have no need to go anywhere. You have to go into the financial market, just do the transaction, there is no transaction cost or the minimal transaction. This is the function of financial market. Then the capital formation. Capital formation means that if we talk about any country, any economy, there is a need of capital formation. Capital formation here itself says that when the funds accumulated and used for the development of an economy, that is called the capital formation. Development of economy here, it means the employment generation, GDP creation, GDP increasing, per capita increasing. So this is the role of capital formation. So this is the overall functions performed by the financial market, that how a financial market helps out in the overall economy. Just for a second. Yeah. Now, who can participate in the financial market? The question arises, who will be the participant, right? So, like you and us. First is the government. Government is the participant of financial market. Then central banks. Banks are also investing in a market. They are also participating in a market. Then corporations, there are many corporate houses, institutional traders. Institutional traders, like if we are talking about the brokerage houses, they are there. Retail traders, retail traders means you and us, right? Whenever we are participating in a financial market, we are comes into the retail traders. Then the brokers are there, that say for example SDFC Securities, ICICI Securities, like market makers, those who are the players of a market, they are the market makers. So these all are the participants of a financial market. They really work into the market and they really move the market. Now, another question arises, if we are talking about the financial market, there are a number of financial market as there. So I have tried to just clarify you the categories of a financial market on the basis of some backgrounds. So when we talk about the financial market on the basis of claim, nature of claim, so there is two category of market, debt market and equity market. Equity market, you very well known that the share market is the equity market, right? Where you can purchase and sell the equity. Another market is the debt market. Debt market means the market where you can get a debt instrument. Debt instrument means you can say the debentures or the government securities, bonds. That kind of market is known as debt market. So on the basis of claim, we have segregated into two categories. On the basis of maturity of claim, there is another categorization, that is money market and capital market. These two are very important to understand because our next PPT is dependent on this categorization. Money market and capital market. Money market means those market where you can get money market instruments. That means the certificate of deposits, commercial papers, bonds, that kind of market is known as money market. And the second is the capital market, which is known as the share market, primary and secondary market. So this is called the capital market. On the basis of timing of delivery, there is another segmentation, that is cash market and future market. Cash market is that market in which we are paying the cash and we are getting the things. This is called the cash market. You are getting the things on an immediate basis. This is called the cash market. Just like a physical market, cash market is there. But if we talk about the future market, in future market, you have to pay the amount, you will get the product in future date. This is called the future market. Not right now you are getting anything. You have to pay right now. You will get the things after some time. This is called the future market. But in financial market, everything is available. In next slide, we understand how future market works. And the last categorization, on the basis of an organizational structure, there is two categorization: exchange traded market, over the counter market. Many of you have heard that the dabba trading. Dabba trading is called as a known as a illegal trading, right? When the where the market, or we can say that in old movies that farmers are getting money from the money lenders, right? And they forfeited their lands. That is called over the counter market, the market where there is no rules and regulations. And for that purpose, another segregation is the exchange traded market, when we trade the in a, with the help of exchange. So over the counter market is OTC market, where there is no rules regulations, that people directly trade. I need a money, I went to some person, I get the money. That is called OTC market, over the counter. Exchange traded, I need a money, I went to the market, I sell my shares, I got the money. This is called exchange traded market. So this is the basic segregation of a market. Now our next slide is, I told you earlier that our slide will start from this related to capital market, right? Because our topic is financial market operations and the share market. So I try to relate the first topic to the second topic, that how share market arrived from the financial market. So in financial market, there is segregation, that is capital market. Now the capital market this comes to you. That capital market means the market where you can buy or sell the securities, right? So this capital market is divided into two categories. First is primary market and the secondary market. Primary market and secondary market is very common to everyone, but I'll give you a short briefing about this primary and secondary market. Primary market means a market where any corporation, any corporate, any company issue shares first time. Any company issue shares first time, that shares will be issued or can be issued in the primary market only, and it is very well known in the name of IPO. IPO basically known as initial public offer. Yesterday's headline, the most important headline of that budget is LIC is going to issue a IPO, right? So in that last budget, LIC is going to launch a IPO. So that IPO means that first time any company planning to issue shares in the market, that is termed as the IPO, and that cannot be into the any other market, that can be issued through the primary market. So here you can understand through this picture that the primary market, there is a corporation, there are companies, that is called new issue securities. New issue securities means the first time, very first shares issued through the primary market only, nowhere else. And there are fund managers, investors. Fund managers means those persons who are managing the funds, they are known as the fund managers. And the investors like you and us, if you want to buy any kind of fresh issue of shares, so you can go and buy the IPOs. How we can buy, that will be covered in a next slide, right? Now the secondary market. Primary market, I hope it is clear to all of you that first time any company wants to issue the share, that will be issued through the primary market. Secondary market is that market where existing securities are buying and selling by the investors. There is no role of companies in the secondary market. The role of buyers and sellers only. Most important role played by buyers and sellers. How it works, that if you want to buy shares of any existing company, say for example you want to buy a share of Tata Steel, Tata Steel is not going to issue fresh shares. So what you will do? You have to go into the secondary market. Secondary market means the market where already product is there. Somebody is having that product. If he is selling the product, then you can buy the product. Just like a used car showroom, right? This is called the secondary market. So there is a two categorization of market: capital market, primary market, and secondary market. I hope it is clear to all of you that what is the role of primary and secondary market. Now, whenever we talk about the primary and secondary market, the question arises stock exchange. Why stock exchange? Because what is the place where we can buy and sell the shares? From the first slide, we are talking about that buying and selling of securities. So from where we can get the shares? So we need to understand we can get the shares from the stock exchange. So stock exchange, what is a stock exchange? Now your question arises, so what is a stock exchange? So stock exchange means a exchange or a place where financial securities are issued by the company, right? Or sold by the company, we can say. Why? To create a liquidity for financial securities. Stock exchange works on order matching algorithm and they earn by charging fees for buying and selling of shares. Now, in simple language, we can understand that stock exchange means a place where companies are selling their shares, a place where you and us buy and sell the shares. That stock exchange provides you the liquidity because anytime you want to buy, you can buy, anytime you want to sell, you can sell. It works on order matching algorithm. Now, the question arises, what does this order matching algorithm? This word is related to mathematical, right? So order matching algorithm, that means if any person is one seller and any person is a buyer, if their both requirement matches, then only order is executed. Say for example, if you want to buy any product, take an example of a vegetable market or a ready-made market. You are going to buy jeans in a market. Then after selecting a jeans, you just started bargaining. Give it me in 800 rupees. He said no, below 1200 I cannot sell. After that, order matching algorithm started working. You come to 850. He said no, before 11, below 11 I cannot. Then your order matching algorithm matches at a 1000 rupees. And you both agree. So this type of transaction, this type of algorithm matches in a stock exchange between the buyers and sellers sitting at their own places. This is the work of a stock exchange. And for doing this type of matching, for doing this type of buying and selling, they charging fees. So this is the stock exchange. Now another question, why stock exchange established? Stock exchange is there, but the question arises, what is the need of this stock exchange? Why to establish stock exchange? The reason is because it is on a varied platform. I hope that many of you have seen a Guru movie, a very old movie that showed that how trading of the goods and securities takes place in an earlier time period. That trading at Mumbai, gateway of India, at that place, trading was done in activities. The goods arrived at a seaport and people started the bidding for the goods. And that kind of trading was there at earlier times. After they started it in a of physical form. Then to smoothen the trading, to smoothen the buying and selling, and to provide the facilities to the buyers and sellers, a nationwide trading platform has been set up, right? And another reason is that to provide equal access to investors all over the country, so that all over countries persons can participate in a proper manner for trading or for buying and selling. Another purpose is that to meeting the international benchmarks, because we have to become a developed country. We are still in a stage of a developing nation. So to become a developed country, we need to meet the international benchmarks. So for meeting that benchmarks, we need to work on smoothen of trading and buying and selling of securities. So for that purpose, stock exchange has been established. And another important thing is enabling a shorter settlement cycle. Now, shorter settlement cycle, it means that whenever we are buying a thing, it will take a time to get the product, right? So for example, it's not like a vegetable market that you are going to the market, take a bag, put your vegetable into the bag and take it from at a home. No, it's not like that. So to shorten the settlement cycle, stock exchange has been established so that if the minimum duration transaction can be executed. This is the basic purpose, basic reason why stock exchange has established. Now, when we talk about the stock exchange, the another question arises that which exchange? Because you heard about BSE and NSE. There are only two major important exchanges. There are many exchanges, but majorly there are two stock exchanges in India, that is NSE and BSE. NSE and BSE, it means that Bombay Stock Exchange and NSE is the National Stock Exchange. These are two major stock exchange, and BSE is known as a Sensex. Sensex means the indicator of Bombay Stock Exchange, and Nifty is the indicator of National Stock Exchange. The figure which I have mentioned is 558,862. That is the figure of last closing, the closing of yesterday's after declaration of budget. And the Nifty figure 17,576. It was the figure of yesterday's evening. So whenever you read the newspaper, you got this type of values. Nifty cross 15,000, Nifty cross 17,000, Sensex crosses 60,000, right? So this is the indicator of market, and by this we can analyze that our country's economy or financial condition is improving or not. If the market, if the Sensex and Nifty is showing the declined arrow, or we can say that if they are showing a declining trend, that after 2 days, after 3 days, you watch the market and you can say that this market is on 56,000, 55,000. So your mindset is saying that the economy is not going in a correct direction. Economy is going into a negative direction. So this is your mindset by which you can take a decision to buy and sell the financial securities. This is one of the uh, another thing is that when we talk about this BSE and NSE, so what is the history of this BSE NSE? When they have started? Because we need to know each and everything, because we are starting from the zero. So we need to understand what is this BSE, what is this NSE, and what is the role. So basically stock exchange means to buy and sell the securities. Here you can see in the picture, can we buy directly from a stock exchange website? Like suppose if I want to buy shares, or if I want to sell the share, can I go directly on a stock exchange website, NSE or BSE? Can anyone reply me by switch
No,
on
sir.
your microphone? No, right? Because they are the stock exchange. They are not the direct platform. They are providing a platform, but they cannot directly selling or buying the things. So what we can do, we need one mediator. We need one mediator. Mediator means the broker. Broker is required. Now, for example, suppose if I am a very new person, I don't know about the share market. Somebody or some of my friends told me that purchase a share of Axis Bank Limited. So what I'll do? I'll just open a Google. I check out. on a national stock exchange that the Axis Bank is at this price. So if I want to buy, what I'll do? First, I need
Demat
to
account.
find Demat account. But for that purpose, I need to find a broker because broker is providing me the Demat form. So Demat account के लिए first I need to find the broker. Now, if I talk about the broker, there are n number of brokers available. Just like when you going to the market, there are n number of shops. You have to select the shop that this shop is reasonable, the behavior of the shopkeeper is not good. So on the basis of various mindset, you choose the particular shop. The same way, I have to choose the broker. There are various brokers, say for example, ICICI Securities, Angel Broking, Karvi Stock Broking, Motilal Oswal Securities. There are n number of brokers, and the brokers are associated with stock exchanges and the retail investors, right? So I have to find the broker. The same way, if there is a seller, he wants to find the broker, and then the stock exchange activities can take place, right? Now, what is this NSE? NSE, National Stock Exchange. So this is the India's largest stock exchange, incorporated in 1992. These are few dates, few years. You should remember that sometimes they may ask, or anybody can ask, when NSE started its operations. So you can say that NSE started operations in 94 and incorporated in 1992. There is one word you can see in the screen that is written in a red color, SEBI, SEBI, right? SEBI is the organization which is the regulator of the whole stock exchanges, right? If anybody can work or wants to work with the stock exchanges, so that particular company has to follow the guidelines of SEBI also, right? And every broker has to follow the guidelines of SEBI. Everyone has to follow the guidelines of SEBI. Just like when we talk about the banks, that RBI is there, so same way when we talk about the stock exchange, share market, SEBI is there, the regulator of stock exchanges, right? So NSE started its operation in 1994, and the BSE earlier it's known as Native Share and Stockbroker Association, established in 1875. It's very old organization, right? And is located at Dalal Street, Mumbai. Both stock exchanges is located in Mumbai itself, right? Now the question arises that the word we have used is Sensex and Nifty. So how we can use this Sensex and Nifty? These two are the indexes. Indexes means that tells us the view of market. Now when we talk about view of market, there is two words. One is bull and another one is bear. Bull and bear is saying that when you thought that everything is good, everything is going in an upward trend, so your view is bullish trend. Bullish trend means your view is saying that everything is going good. The movement is in an upward trend. The prices will go up high. This is called the bullish trend, right? This is called bull view. Another thing is when you thought that no, economy is going down, prices will go down, the market will crash, right? So this is called bearish view. So there is two things in a market, and these two things can be visualized with the help of this index. Index will tell you the view of a market, it's bullish view or bearish view. If the trend of a Sensex or Nifty, or we can say combine the index, if the index is going downward trend, you can say that market is bearish. Market is bearish means everything is negative, right? So this is the way to understand the movement of market. It's bullish or bearish. So here, to understand the market direction, index can be used. And the understand the index, there is two index, Sensex and Nifty. Now the Nifty, Nifty can be prepared. So Nifty is National Stock Exchange 50. It is representing the weighted average of 50 Indian companies stocks in 12 varied sectors, right? And it is one of the two main indices used in India. In India, there is two stock indices used, Nifty and Sensex. So it is one of them, and it is represents the weighted average. You have heard about the statistics. So weighted average of 50 Indian companies stocks, and the base value of Nifty is 1000. In previous slide, we have seen that the Nifty present rate of Nifty is 17,000, but the base value of Nifty was 1000 when the Nifty started. Nifty started in 94. So at that time, the value of Nifty is 1000 when the Nifty started, right? And the today's value is 17,000. So you can understand, you can think that the growth of from 1000 to the 17,000, and I show you how this growth takes place over the year from the 94 to the present stage. Here you can see the growth chart of Nifty index. In 1996 it was on 1107. 94 it started its operations and the base value was 1000. So I have not taken that figure. In 96 it was 1107, and it takes around 8 years for doubling. 1000 to 2000 it takes around 8 years, 96 to 2004, long period. So after that, the growth of this Nifty index is just like you can see the chart. It's an upward trend. Upward trend means in 2006 it's 3000, just 2 years. 2004 to 2006, 2000 to 3000. 2006 to 2007 just double. If suppose for example you invest in the market in 2006, 100 rupees, then your amount will be doubled in 2007. This is the growth. This is the growth of economy from the share market. So you can understand, people are saying that in a share market people may become very rich, right? So this is the way how people can become a rich, right? This is the journey, and the present stage is 17,576, and today it is also up, very up, around 17,600 above, right? So this is the market conditions, how the journey takes place from the 1000 to 15,000 and 17,000. In last year, the Nifty index was on 15,000, and this year this is 17,500. So this growth will gives you good returns. How we can get the returns? We'll understand how to trade in a market. Another thing is that Sensex. We got the Nifty. Now another thing is that the Sensex. Sensex here says that sensitivity index. Sensitivity index means the weighted average of 30 Indian companies stocks. 30 Indian companies stocks का जो weighted average है, that will be represented as a Sensex. Sensex represented for the BSE, Bombay Stock Exchange, right? And the base value of Sensex is 100. Now you can understand, the base value of Nifty is 1000, but the base value of Sensex is 100. This started from 100. And the growth chart of this BSE Sensex, you can imagine, just see the chart. 1979 it was on 100, 1990 1000, the growth of 10 times. 79 to 90, around in 11 years you will got 10 times growth. 10 times means you deposited 100 rupees and you got 1000 rupees. Every year 100% return, double the return. This is the advantage, right? And 1990 to 92, The growth was 4 times. In 2 years, the amount will comes to 4 times. This is the growth story of BSE Sensex. Any question you want to ask here?
Sir,
Hmm.
sir, the BSc started in before 1900, no? If I'm not wrong, I think
It
1875.
was 1875, but it's legally started in 79.
Okay,
Yeah, earlier it was working, but it is in a offline physical mode. So there was no Sensex. After that, they converted into the forms of exchange, and after that, the value has been derived on the basis of weighted average of companies' shares. So the journey started from 79. Like
okay, sir.
right. You heard about the various famous persons who earn money through the market. Like one name, very famous name, belongs to your Mumbai Maharashtra region, that Rakesh Jhunjhunwala, right? He started his business and not a business. He started investing in a share market and earns thousands of crore rupees, thousands of crore. And on the basis of those profits, he started a airline industry on the basis of those profits, right? One more person is that Dhamami, Mr. Dhamami, right? D-Mart जिनका है, D-Mart Group, he is also earn profit through the stock market, and after earning profits, they invest it into the company, and they started a company D-Mart Retail, right? So this is the way how people earn. If you want to earn a money in a market, there are n number of options, right? Market will gives you good returns, but it depends on your study, how we can track the market and we can earn through the market. Now we'll move how to trade in a market. Up till now, this is just a history and the basic theoretical portion of our discussion, that how to understand the market. Now the question arises how to trade in a market. So now my PPT will turns into the trading part, how to trade in a market. This is the basic funda, basic we can say the basic theory of a market, that share market is this, right? Now after this, whenever we are planning to trade, first thing we need to understand that in which sectors, right? Sector is very important to choose. Say for example, like if you have a money and you want to invest your money, first thing, where to invest? First question arise in my mind is where to invest. So you have to identify the sectors, right? So how we can identify the sectors? So sectors, few sample sectors I have taken over here. Like one is the energy sector. Energy sector means the sector which, or we can say the companies which is related to the energy production, batteries, like, so this type of companies comes under the energy sector. Industrial sectors, consumer durables, right? Financials, you can say that banking firms, insurance firms, right? This comes under the financial firms. IT sector means Wipro, Infosys, right? These are the IT sectors. Then telecommunication services, Bharti, then BSNL, Reliance Jio, right? These are the sect companies. So I take only 3 4 names, but there are more than 10 15 20 companies in each and every sector. Utility sector is related to the electricity companies, water supplying. Real estate sector, that we can say L&T, right? One Sahara is there. Right now, there is some disputes with Sahara, right? So there are variety of sectors. So first you need to understand in which sector I have to invest, right? because it's not like if you want to invest, you close your eyes and just like invest your money in any sector. No, you cannot do that. First, identify the correct sector, because you earn money through your hard efforts, right? So you cannot waste your money. So first, choose the particular sector in a most effective way, right? Then after selecting the sectors, what you can do, that you go to the stock exchange. Now the stock exchange how works, that first thing is, suppose you are a company, so company listed their shares, right? Take example, suppose if that I want to start a company, so what I can do, I need a money, so I listed my shares in a stock exchange, right? After listing of my shares in a stock exchange, that second is I issue my shares into the primary market, right? Then primary market, after that primary market, that comes into the IPO issues. IPO issues, that after shares were distributed, might be many of you are commerce students, so shares allotment, share applications, you have heard about that. So this is the very simple process. Whenever any company issue IPO, public will apply for purchasing of that IPO. It's not like that company is directly giving you. Say for example, if in near future LIC is going to issue IPO, so what they will do, they listed their IPO in a market, primary market. Through that market, they launch their IPO. IPO means initial public offer. After that, the public will apply for IPO. That, say for example, X person wants to purchase 10 shares. So he apply for 10 shares. I want to purchase 25 shares. So I applied 25 for 25 shares. After those applications, what the company will do, they sorted those applications, and if the applications and the number of shares is matches, then they distributed or they allotted the shares to the investors, right? And after that shares allotment, that shares has been shifted to the secondary market, and then after trading will begins, right? After that, after issuing, after allotment of shares, then only the shares comes into the secondary market, right? So this is the basic procedure of a stock exchange, that IPO issues, IPO shares allotted, and then only share trading begins in a secondary market. Now after that secondary market, how your working started, if you want to buy a share, you what you will do, you placed a order. First, very first step is that you place a order, right? After that, what your broker will do, broker send it to the exchange. You place an order through your broker, broker they send the information to the exchange, right? Then after, the third step is that your exchange finds the counterparty. Counterparty means, is there anyone who wants to sell the particular thing? If yes, right? If no, then your order will be cancelled. But if yes, if there is a availability of any party who wants to purchase or who wants to sell the shares which you want to buy, then exchange confirms to the broker. After confirmation, broker will debit or credit the account. It means if the exchange says yes, the seller is available, then broker debit or credit the account. If I am going to buy the shares, so broker will debit my account, right? And if I want to sell the shares, the broker will credit my account. This is the very basic funda of a working of a stock exchange, right? Now, at what time we can trade? So the regular trading sessions is 9:15 to 15:30, right? Morning 9:15 hours to afternoon 15:30 hours. That means 3:30 p.m. Till that time you can trade. So this is the market timing. If anybody wants to learn the share market, how to trade in a market, so first thing is that to open a demat account. After that, these are the market timings. At that time, you can buy or sell the shares. Right. Now in share market trading, you can do two things: buying of shares and selling of shares. Only two things you can do: buying and selling. There is no third option. Here the question arises, you want to invest or you want to trade, because many times I have used these two words, investment, trading. In general both are same, but when we talk about in a depth stock market trading, these two words are very different. Investment is very different, trading is very different. So what is investment and what is trading? Anyone, I need to hear from your side. Investment and trading, both are same?
The continuous buying and sharing of shares is trading, and investment
Hmm.
is buying and waiting for a long period of time.
Right. So there is two type of persons in a market, right? One, first person is that who wants to invest in a market. So that is like, I have 10,000 rupees, I invest in a market, I waited for 10, 15, 20, 30 years, I forgot that money, right? This is called investment. But the trading, I started, trading is just like your business. Every day at 9:15 you started your computer, you started trading, buying selling on frequent basis. This is called the trading, right? And the funda of share market is investors will always in a profit situation, but a trader may be in a loss or maybe in a profit. There is no surety. But for the investors, the share market always gives you a very good return. And the average return of the share market is more than 10%. More than 10% return is given by the share market for the investors. But for the traders, there is no surety, because trading is very risky, because at the next moment you don't know what will happen, right? At the next moment you cannot say in the next 2 seconds what will going to happen to you. So trading is very risky. But no, it's not like. First we need to understand both the things, investment and trading, then only we can say trading is risky or not, right? If you do it in a smart way, trading is a profitable. But if you are doing it in just without any knowledge, without any study, then the trading is in that will gives you a loss situation always, right? So investment. How to invest in a market? First, broker is the party that mediates between buyer and seller. A stockbroker or broker is a regulated professional broker. Because what happens that generally in a market, we go to the broker and we talk to him, and we want to get the suggestion from the broker that which type of shares I can buy, which type of shares I can hold for the long period, right? And the broker suggests you, but it's the study of broker, not you. No doubt, in a market, he is working from so many years, he is knowledgeable. But when you want to invest your money, first thing you have to study yourself, right? This is the basic funda of a market. Now, how to invest? First process is open a demat account, right? First thing is we have to open a demat account. Why demat account? Because whenever you purchase any shares, that shares should be put anywhere, should be put at which place, right? Just like a bank, in a bank account, your money can be kept So in the same way, in Demat account, your shares can be kept. So for that purpose, Demat account is compulsory. Before 15-20 years, there was a no rule of Demat account. At that time, the physical certificate has been issued by the companies on the name of an investor. Suppose you purchase 10 shares, so that company will send you certificate of 10 shares at your postal address, and it requires lots of cost. It requires lots of time, many things. After that, dematerialization comes takes place, and after that, demat account is there. So we have to open a demat account. After that, attach with broker or sub broker. Then third process is a computer terminal with Odin software. Computer terminal and with Odin software, that means there is a software which is used for the trading purpose, right? Might be you have seen, and I have a sample demo also for that Odin software, a software which shows you a black color screen which is giving you a reflection of red and blue colors, right? That is called Odin software. So that software is given to you. After that, you will get a username and password. Then you will get your login details, right? After that, you can buy or sell the shares. If you buy shares, your shares move to the demat account. If you say shares, that moves out from your demat account, right? So it's just simple flow chart of a working of your demat account, right? Any question here? Okay.
No, sir.
Now this is the simple demo of a Odin software. This is just very simple. Here n number of shares are available. It is customizable. It is depend on the person to person. If you want to select a particular company share, so you can sort out it, you can select it, you can customize it. You want that you need something else with this particular software, you want to attach a chart also, so you can attach. So this is called Odin software. And nowadays these Odin software, just hold for a second, students. Yeah, so in this type of Odin software, the trade is very easy to buy and sell the securities or to buy or sell the shares. Nowadays, uh, web-based software is also there in which you can see the shares, but those who are the professional brokers or those who are the professional traders, they use this type of software only, right? So this is very important, and this is a very good software. Every professional trader is using this software. Now, trading terminologies: delivery and day trading, right? Delivery and day trading is two common terminologies when we are purchasing the shares, right? For the purpose of holding them for more than a day. Suppose I want to purchase a share and I want to hold it for more than one day. This is called delivery trading. And if I want to purchase a share or sell the shares for the intraday. Intraday means within the day. Then in that case, This is called day trading. Right? So delivery and day trading, these two terminologies is very important. In intraday trading, you have to square off your position on the same day. The same day means suppose you purchase a share in morning 11 a.m. So you have to sell it before 3:30 anyhow. Otherwise, the exchange will square off your position at the available market price. This is the concept of day trading. In case of day trading, you have to square off. Square off means if you buy the share, then you have to sell it anyhow, or if you sold the shares, then you have to purchase it anyhow. Right? This is called day trading. But when there is a concept of delivery, you have to purchase the shares, stocks, right? You can hold it for more than one day. This is called delivery trading. Now, when we talk about the price, so in case of a price, there are n number of prices available. First price is that LTP. The short form is LTP, last trade price, right? Last trade price is saying that the price of a particular shares lastly traded means with fraction of second just before what is the price of that particular share, that is called LTP, last trade price. Whenever you are purchasing a share, that price is the LTP, last trade price. Open price means whenever the market open, right? So the prices shown by that particular market at the starting of a market, that is called open price. Close price means at the ending, closing of a market, that particular share price is reflected in an exchange is known as close pricing. Right? Day high and day low. Day high means in the whole day from 9:15 to 3:30, what is the highest price that which was touched by a particular share, that is called day high, and day low means the lowest price of a particular day, that is called day low prices. Then another thing is 52 weeks high and low. 52 weeks high and low, that means that in a 1 year period from the day of trading, last 52 weeks, what is the high value touched by a particular share and what was the low value touched by the particular share, that is the 52-week high and low. Why this prices was mentioned in that particular trading terminal? The reason is because you need to know what was the highest benchmark touched by the particular company share, what was the lowest value of 1 year, today's highest and today's lowest value, today's opening price, and what is the current price. Current price means the last trade price. So on the basis of these prices, you can take the decision to buy or sell the share, right? So this is the trading terminology related to the price. Now another thing is that important terms is market price. Market price here is saying that the price which is reflected or which is existing in a market, that is called the market price, right? So if suppose you are watching a window and you said that the shares of a X bank is available at 400 rupees, so that is called the market price, right? So if you want to purchase the share, you can purchase the share through the market price, right? Now another terminology is saying that limit price. Now the limit price is saying that in present situation the market is showing 400 rupees price of a one share, but you said no, I want to buy in 395 only. So what you will do, you can apply your order at 395. This is called limit price. So you can understand the market price means whatever the price available in a market, you can purchase through the market price. If you don't want, then you can put your own prices, that is called the limit price, that if the market will touch or if the share price will touch 395, then only I can buy, or otherwise I'll not buy, right? So this is called limit price. These two things, second last and last, margin and short selling. This is a very beautiful funda of a share market, and it is related to the intraday trading. Intraday trading means when you want to buy and sell shares on a same day. In that case, company provides you some additional advantages. Every broker will provides you additional advantages. What kind of advantages? First thing is margin. Margin means, say very simple example, if suppose you want to buy anything, buy the shares, right? So you need to have a cash, very first thing, right? Suppose, take some numerical example, that the particular share price of X company is ICICI Bank is 100 rupees, and you want to buy 10 shares. So you need 1000 rupees for the purchase of shares. So in case of a margin trading, in case of a intraday trading, there is no need to have 1000 rupees in your back pocket or in your bank account. Why? Because you are doing intraday trading, and in case of a intraday trading, yeah, day trading, companies provides you margin facility. Margin facility means that you can buy the shares of 1000 rupees, but in rupees 500, 400 will give you margin limit. The companies will, broker will provide you margin limit. Margin limit means 10 times, 5 times, 6 times. It depends on broker to broker, right? Say for example, 10 times margin is provided by the broker. That means in 100 rupees, you can buy the shares of 1000 rupees for the day trading purpose. This is the advantage of day trading, and this is the reason for which people will attract for the intraday trading, because in less amount of cash you can purchase more amount of shares. This is the advantage of day trading, right? So this is called margin. Margin means the extra limit provided by the broker for purchasing of shares on a day trading purpose, right? This is called margin. Another thing is short selling. Now, short selling means in physical market, if we take an example, in physical market, can we sell the things which we are not having? Not possible, right? If I don't have any particular thing, then how can I sell the thing? But in case of a day trading, right? In case of a day trading, stock exchange and brokers provides me the facility to short selling. Short selling means first sell the shares, after that you buy the shares. Why? Why? First thing is comes to your mind is that why should I do this? Ultimately, we know only one concept: first buy and sell, right? Because you buy the shares, after that price will go high and you sell the shares so that you can earn profit. But in case of a short selling, how you can make profit? When you sell the shares at higher prices and buy the shares at a lower prices, you can make a profit by the short selling. And short selling is usually done when the market is going down, or we can say when the market is in a bearish view, you can use the concept of short selling. So this is the advantage of short selling. Now, delivery trading is also known as cash trading, and in this case, we can buy shares with the cash we have. If I have 10,000 rupees, I can buy shares of 10,000 rupees only. I cannot buy shares of 20,000 rupees with 10,000 rupees. No, it's not possible, right? So this is called delivery trading. Day trading, we can buy sell shares within same day, and margin trading facility is available. Margin means the extra limit, and it may varies from 5 times to 20 times. 5 times to 20 times means if you have 100 rupees, you can buy shares of 20,000 2,000 rupees. Right? So this is the advantage provided by the brokers to the traders. Now, there is one more terminology, order and trade. Order means bits you are putting into the terminal, right? Whenever you are trading in a market, there is two things reflected, order and trade. Order means you are planning to buy a particular share, you put your prices, you put your number of shares you want to buy and click on submit. That is the order. But when the exchange confirms the transaction, exchange executed the transaction, then that case the trade will occurs, right? So order means bits you are putting into the terminal and trade which are executed. So after execution of order, trade has been shown into the account. So this is just a simple window how to buy the shares through the Odin software. So this is the order form by which you can put your requirement in this type of share software. What you have to do first thing is you have to select the particular share. After selecting the share, you have to press the button for buying, right? Or for the buying, there is a shortcut key in Odin software is plus. In numpad, in your keyboard, there is a numpad. On numpad, if you press the plus button, that you can your buy option will be open to you. And in that case, only you have to put the total quantity, how much quantity you want to buy. This total quantity you have to write here in the total quantity column, and the prices which is known as LTP. You can see in the screen that the symbol is Prithvi. The share name is Prithvi. I want to purchase, right? And the LTP, this is the LTP last trade price, and the price is showing 251.80. This is called last trade price, right? And if I want to see that 250.60 is the closing price of last day, opening price is 253, high is 256 and low is 249.80. So by this view values I can see the variation in particular share. So what I have to do, I have to put only total quantity, and if I am a professional, so I have to write a client code also, and if I do it for my own, then there is no need to write client code, right? So this is the way how I can put order for buying. In the same way, for selling purpose, I have to press minus button in my keyboard, then the sell window open for me. So this is the way you can put your orders. Just hold for a second, students.
Um,
Students, please wait. Sir will be joining shortly.
Yes, ma'am.
Okay.
Yes, ma'am. Yes, students, sorry for the interruption. Just yeah. So, students, we are on a how to sell in a share market. So, this window is open to you, and in that case, you have to write your number of quantity which you are going to sell, right? So, selecting the shares, uh, put or press the minus button so that your window will appear. This is a sample form for the Odin software. Every software is having their own norms, but this is a sample for the Odin software. So you have to write the number of quantity which you want to sell, by which you can get the details of a selling of shares. Now, the important thing is whenever we are trading, so how we can earn profit. So for that purpose, the basis of trading is that fundamental basis means that we need to analyze the company's accounts, because the question arises, which shares I have to buy, which shares I have to sell, which shares I have to hold for the more period, right? So this is the question, and you can get the answer by your own. How we can get the answer? There is two ways. First is the fundamental basis, and the second is technical basis, right? First is the fundamental basis, and the second is technical basis. In case of a fundamental basis, you can understand the company's accounts. Company's accounts means you have to analyze the company's annual statements. You have to analyze the business profitability. And how we can analyze? We can analyze through the EPS, profit earning ratio, right? Price earning ratio, book value to price earning ratio. These are the few ratios by which you can understand the situation of a particular company, right? So this is the way how we can understand and how we can analyze the fundamentals of a company. Because if the fundamental is strong, then in that case we can say that the company is in a good position and we can earn profit in a long term. This is the fundamental strategy. If we talk about the technical basis is providing you the movement of prices on the basis of charts patterns. So on the basis of charts, because you can understand the charts also, on the basis of those charts you can analyze the patterns, how the particular share prices goes up, how the particular share prices goes down on the basis of charts, right? So there is two ways, fundamental basis and technical basis, by which we can trade in a market, right? Now these were related to the day trading and delivery. Another important thing is derivatives, right? And in derivatives, that is related to futures and options, right? Futures and options. In case of a future, in case of a futures, uh, we can get the contract of a future date, and another case is the options. So these two are the derivative products. Derivative products means the product which is derived from a existing product. Say for example, shares of a ICICI bank is the current product, cash product, right? But if you want to buy the future of ICICI Bank, that is called derivatives. In that case, you will get the shares in future date. You will not get shares in a present date. This is called derivatives. The same way the options is there. Now, what is the concept of future trading? Future trading is basically related to that standardized contract. Future trading is a standardized contract. Standardized contract means it is a legal contract in which you can make a contract, right? In case it is standardized contract, and in this contract we can get the shares at a particular time frame. Margin trading is also there. Margin trading means we can say that with minimum amount we can purchase the shares of a maximum amount. That is, the leverage is around 1 to 100 times. That means in 1 rupees we can purchase shares of 100 rupees. This is the advantage of future trading concept, right? So this is very important to understand the benefit of future trading, because if I want to purchase the shares and I don't want to hold the shares for a longer time period, then I can go for the future trading, right? Two-way opportunities. If you thought that the market will goes down in next 1 month or 2 month, then definitely you can sell the shares. If you thought that no, market will go up, so you can buy the future contracts. So this is the way how you can make money in a future trading concept, right? Another thing is it is a hedging tool. Hedging tool means that whenever you want to manage your risk, suppose in suppose physically you purchase the shares of X company and market is going down, and you want that you have to manage the risk, so you can sell the future contract of a particular share so that you can hedge your position. Hedge means you can manage the risk of your shares, right? So this is the advantage of your future trading concept. Because of time shortage, we cannot go in much depth position, right? But just overview of future concept. Now another thing is option trading concept. Option trading is saying that whenever you thought that the market will go up, in that case you can go for the call option. There is two type of option: call option and put option, right? And another thing is put option. Put option means whenever you thought that you have to sell the market, or your market will going downstream, so you can buy the put option. So this is the way, and the best advantage of this option trading is that your risk is limited but your profit is unlimited. That means your profit is unlimited. That means you can earn n number of amount, but your loss amount is maximum to the amount paid by you only. This is the advantage of your option trading concept, right? So these are the two concepts of option trading, right? Another thing in a stock market is the SIP, systematic investment plan. This is generally related to the mutual fund, but it is related to the financial market. That's why I have involved this, that the initial minimum, or not a minimum, the amount invested by an investor on a particular time period. Say every month you are investing in a market, right? Every time investing in a market, so that is called SIP. Another advantage is power of compounding. Power of compounding is saying that when you invest in a SIP, your money will grow in multiplier options, multiplier types, right? That means 2 to 4, 4 to 8, 8 to 64, likewise, right? So that is the power of compounding. Third is advantage of averaging. Advantage of averaging is saying that if suppose you started your investment in a market, after sometimes your market goes down, so you purchase at a lower rate, sometimes more market down, you purchase at another lower rates. So this is here you can get the advantage of averaging also. So SIP, the basic funda behind the SIP is saying that it will always give a profit, right? This is the advantage of averaging in SIP, and it is very good for the small investors, those who are planning for saving or for small investments, right? SIP is very good option for their investment. Even though as a student you can also start a SIP of not more than 100 rupees at least, right? So that you can understand the impact of SIP and the returns from SIP, just to learn from the market, right? So even you can also start SIP from your own pocket money, right? And the most important thing is that if you want to earn more money, so you have to take more risk, because it is directly relationship that more risk, more return. And the basic funda about the stock market is don't track the news, track the trend. Why track the trend? Because stock market 90% is related to the emotions, right? Because on the basis of emotion stock market is working, but if we really want to earn from the market, what we need to do, we need to track the trend, what market is going on. After analyzing the market trends, you always be in a profitable situation, but if you are not tracking the trend, you may be in a loss. So now I am open for the question answer. If you have any question, anything in your mind, anything you want to ask related to stock market, related to shares, derivatives, options, futures, I'm open for you people.
Students, what all questions you have, please ask it.
Hello.
Yes, go ahead.
Actually, sir, I want to ask one question to you that when to enter into the market and when to exit. Because sometimes कैसा
See,
होता है ना कि पता नहीं चलता है कि कब बाहर आना है, कितने प्रॉफिट के बाद बाहर आना है. तो इन दैट केस स्ट्रेटेजी क्या होना चाहिए?
See, your question is very good, because it's has to be decided by our own self that when to exit. Because whenever you are planning to enter, right, that is not surety. Suppose if you want to enter into the market right now, so the question arise to your mind कि यार अभी तो शेयर मार्केट 58,000 पे है, मैं अब परचेज करूंगा तो कब प्रॉफिट होगा, राइट? सो वी थॉट, एंड बाय दिस थॉट वी ऑलवेज स्टे बैक that no, we should not enter at this price, right? So this question arise in our mind. So don't think over this. Whenever you think that there is market down by 1000 2000 points, always enter into the market, because whenever there is a top in a market, the market will get you a correction of 1000 to 2000 points always, because you have seen the trend. Because my last slide is saying that track the trend. Whenever market touches a new high, after touching a new high, it goes into the correction for 2000 1000 points down, and in that duration you enter into the market, right? because you cannot wait that the market will comes to the 45,000, then I'll enter into the market. No, you cannot wait. So whenever the correction phases started, you try to purchase few shares. And another important thing is that don't put your full money into the market. If suppose you want to enter into the market with 10,000 rupees, so start with 4,000. After that, you wait and watch, and you thought that no, after purchasing of my shares, the market again get down, then again purchase the 4,000 rupees shares, right? So that you can average your shares. So this is the way how you can enter into the market. And you have to decide your own deadlines, that no, I want to achieve a profit of 2,000 rupees, after that I will come out from the market. So this should be your deadlines, your ending lines and starting lines, because market is fluctuating. You cannot say that I'll wait for 70,000, I'll wait for 80,000. No, market will reach to 62,000, then again it will come to 59,000, market again reach to 67, then again reach to 62. Market is moving with the fluctuation. So if you want that whenever market makes a new high, try to come out with half of your shares amounts, that you have a 10,000 rupees share, so sold 5,000 rupees shares at a new high, because after achieving a new high, market will gives you a correction points. So after that, on the point of that correction, you again invest your 5,000 rupees. So this is one of the strategy.
Thank you, sir.
Sir, and loss means in case of option trading,
Mhm.
it happens that the stop loss gets hit, and after that the price goes on increasing. So should we apply the stop loss or no?
See, one more thing, most important thing is stop loss बनता ही trigger होने के लिए. The very basic funda is, because stop loss, we are setting the stop loss. Why? Because somebody told us, somebody gives us calls, right? On the basis of those calls, we have set the limit price, we have set the stop loss also, and the target price also. And whenever you watch those calls, then you always see after triggering of the stop loss, that particular share prices reach to their target only, right? And we thought कि इस प्राइस को सिर्फ हमारा स्टॉप लॉस खाने के लिए ही आना था, राइट? इट ऑलवेज हैपन, 99% इट हैपन्स. So it's stop loss if you want, if you are in a capacity to bear the risk more than disclosed by the advisors. So you put your stop loss more than that, because this type of calls is provided to many of the peoples, right? And when you see in a stock exchange that everywhere you'll find that number of traders available at this price, so the market will move accordingly, right, at the price where more number of buyers or sellers stand there. So stop loss, if you want that your stop loss should not be triggered, so apply stop loss a little bit lower as described in your calls advice suggested by the advisor, so that your stop loss may not be triggered. Otherwise, don't apply stop loss. Wait and watch.
Okay, sir.
Hello, sir. Good afternoon.
Yes.
Sir, with regards to yesterday's budget,
Hmm.
which sectors will be if affected positively or negatively? What is your opinion, sir?
Yeah.
Thank you.
Your question is very good, and everyone is having their own opinion. And in my opinion, first thing is that the honorable finance minister said that the vehicle manufacturing, electric vehicles, so those companies who are in a manufacturing of electric vehicle and those which is related to the battery manufacturing, that sector will goes definitely very high. And in the yesterday's share market, the reflection shows that the shares of those particular companies goes very high, tremendous growth, right? And other thing is that those companies which are related to the fintech areas, right, financial technologies firms, so for that purpose, the growth is positive, right? And when we talk about the negative aspect, so there is no as such a negative because every sector is getting somewhere profitability, right? Because the best thing is there is no increase in a corporate tax, right? And for the startups, they have extended a 1 year limit also. So it depends on, from my opinion, the budget is on a positive aspect, moreover, rather than a negative aspect. But no, definitely the companies manufacturing electric vehicles, battery manufacturings, and those real estate infrastructure development, that definitely will go high.
Thank you, sir.
Sir,
Hmm.
so as this is a session regarding share market, so do you
Hmm.
think that cryptocurrencies can be alternative to this?
Yeah, even though in yesterday's session, RBI that finance minister declared that the RBI will going to launch a digital rupiah, right? So it is just an alternate of a cryptocurrency, and because this is a dispute between that legalization of cryptocurrency, so government said that if you want to earn money from the cryptocurrency, that just pay 30% tax and get it legalized. So this is the way, because government is planning to make a digital currency, and even yesterday they declared that the RBI will give issues a digital rupiah. So no, this is definitely a good step by the government, and even very soon this digital rupiah you will find in a trading platform also.
Because sir, cryptocurrencies are not legal, but still India has invested about 7 lakh crore in crypto,
Yeah,
and
that
means the government has
what
given the taxes, so they will also get about 2 lakh crore as tax.
this is the way how, because directly government cannot legalize the things, so they have find the alternative ways, right? What the alternative is, take they charge the tax on a cryptocurrency. By this way, right, they can earn the revenue because everyone is trading in a cryptocurrencies, right? And for that purpose, to because they know that the people are interested in digital currencies, right? Not only crypto, there are n number of countries are having their digital currencies, right? So for that purpose, India is launching a digital currency so that people started trading in a digital rupee also. And they charge tax to earn the revenue.
Okay, sir.
Hello, sir.
Yes.
I have a question. Can I trade when markets are closed or shut down?
No, you cannot trade because the window is closed for the trading purpose. Because the time limit is there, right? After 3:30, even though after 3 p.m., you cannot sell or buy the shares because the market is not open for the public. That particular last 5-10 minutes is only for the settlement period. And after market closing, you can only see the screen of a share market. Your buying window will not accept the orders, your sell window will not accept the orders after closing of a market. You can apply a limit order also. You can apply the limit order, but your
Okay,
trade will not
thank
be
you, sir.
executed.
So I have one question.
Hmm. Yes,
Uh,
ask.
yeah. Why company brings buyback shares and what are their benefits?
The buyback is issued as per the section 77, right? But there are certain restrictions. It's not easy for the companies to buy back the shares until unless it has been permitted by the SEBI also, right? Advantages are that if they want to reduce their liquidity or ownership from the market, for that purpose, they buy back the shares. Suppose, for example, the company's ownership vested in a general public, right? More than 25%, more than 50%. So the ownership, the company wants to get the ownership retained with the board members or managing members. For that purpose, they apply for buyback with the SEBI, and if the SEBI permitted, they initiated the buyback of the shares just to regain the ownership.
Sir, in share market means for Tata Motors, we have one share
Hmm.
of Tata Motors and another is Tata Motors DVR. What that
Hmm.
DVR is?
See, this is just a kind of alternatives, just like we can say that mm, when you go to the market, that in physical market, say Maggi atta noodles, Maggi this flavor, right? So these are some kind of a denomination discriminations in a Tata Motors, but basically when in reality the Tata Motors is there, right? Tata Motors DVR is a little bit different. Maybe it may be like some another company or some subsidiary company who is launching their shares on the name of Tata Motors DVRs, because there are so many names which is resemble to each and everyone each other.
Sir, actually that I checked for DVR, the full
Hmm.
form they used was differential voting rights.
Yeah, differential voting rights. Yeah, yes, short form. See, there are some shares which is having their full voting rights and some are having their differential voting rights. Differential voting rights means they can vote in the board meetings for the decision related to particular like dividends for expansion or for anything if the board members calls them for the voting, right? Every shareholder is having a right for voting until this there is a minimum limit. Say if you are having a 20% ownership or if you are having a x% ownership, then only you have a voting rights. So they have disclosed that particular shares for with direct voting rights. Oh, right. So that is mentioned by DVR.
Okay, sir.
Sir Subodh have one question.
Mhm.
Which site do you suggest for market analysis?
Yeah, I have seen. See, it depends on if you want to go for the fundamental analysis. So you can get the details on a NSC, National Stock Exchange, www.nscindia.com, right? On that website, you will get all type of fundamental details. Fundamental details means the PE ratio, annual reports, cash flow analysis, all type of details. Even though you can analyze the historical data of the particular share prices, right, on NSC. But for the purpose of technical analysis, you can refer the Bloomberg, right? Bloomberg is the site where you will get the technical data or various charts is also available. So you can read the charts for technical analysis. For fundamental analysis, National Stock Exchange website is much better because their data is authenticated.
Sir, I am Udit. I have one question. How
Yeah.
can we balance between the technical and fundamental analysis?
See, fundamental analysis is the basic criteria to judge this company sector, right? But In really you want to trade, you have to go for the technical analysis. See, just fundamental analysis is just the cover, just the cover. But if you want to really test the things, you should go for the technical analysis, not for the fundamental. Fundamental gives you direction that yes, this is good, but in actually it is good or not, and it is really giving you profit or not, that will be provided by the technical analysis.
Thank you, sir.
Hello. Yes, sir. I'm audible.
But your voice is not clear.
Hello. I am audible.
You are audible, but your voice is not coming properly.
Sir, I want to ask that. Hello.
Yeah, ask.
that ये इसके लिए आईपीओ के लिए कब अप्लाई करना है, मतलब बेस्ट टाइम क्या रहता है कि ऐसा होता है कि जब आप आईपीओ अप्लाई करते हैं पॉसिबिलिटीज बहुत कम रहती है
See,
विच टाइम
yeah. I'll tell you. See, there is two things in IPO. One is if the company is good, बहुत अच्छी कंपनी है, तो आपको अगर आईपीओ के लिए अप्लाई करना है, तो उनका टाइम फ्रेम होता है, ठीक है? In that time frame, you have to apply for the IPO. Say, for example, the launching date of IPO is 1st January, and the closing ending date of IPO application is 20th. तो उस केस में आप क्या करोगे? उस केस में यू हैव टू अप्लाई. अब क्वेश्चन अराइज, कितने शेयर्स के लिए अप्लाई करना है? बिकॉज अगर ज्यादा सब्सक्रिप्शन होगा, बहुत अच्छी कंपनी, तो एवरीबडी वांट्स टू बाय द आईपीओ, राइट, उस पर्टिकुलर कंपनी का. सो इन दैट केस यू अप्लाई फॉर मोर, सो दैट यू विल गेट एटलीस्ट वट एवर यू वॉन्ट. If you want to buy 10 shares, so you apply for 100 shares, 150 shares, so that you will get a chance to get 10 shares, right? So this is the way. Because अच्छी कंपनी का आईपीओ हमेशा ओवर सब्सक्राइब्ड होता है.
Sir, adding to that question, how are the IPOs are
Mhm.
allotted? Because a lot of the people bid for that. So how can I improve my chances of that getting me the my desired
Yeah,
IPO?
just pardon your question. Repeat your question.
Sir, as my friend asked you, that I'm just
Hmm.
adding to that, that lot of the
Mm-hmm.
good companies IPOs are oversubscribed. So that how
Mm-hmm.
can I increase my chances of getting me the allotted?
Only you can increase your chances by applying more number of shares, because if you apply for the less number of shares, so your application is all rejected, because they allotted shares on the pro rata basis, right? Pro rata basis means on the proportionate basis. Those who applied for more shares, they'll be given proportionately some shares, right? So for that purpose you have to apply for large number of shares.
Okay, sir. Because I applied for one or two times, but I was just bidding for only one slot. Maybe that might be the reason
Yeah,
I
that's why
didn't
you
get.
have to apply for more than one slot, so that you will get chance to get at least one or two.
Okay.
Because
Thank you, sir.
if you are not getting, if you're not getting shares, your application money will be refunded by the company.
Yes, sir. That was refunded, but it stuck for
Yeah,
some days.
yeah. But you have to sacrifice for that few days.
Thank you,
And
sir.
sir,
But I think, sir, for one PAN card, only once you can apply, right? For IPO.
Yeah, but you can apply more lot, na? There is no restriction on limitation of lots. You can apply for more,
Okay.
or if you want, then you
Okay.
can apply with your on the name of your family member and all.
Okay.
and sir, in case in retail market, if IPO is subscribed for 4 times, and if I apply for 4 lot, so is there chances that I will get minimum 1 lot in that case?
See, it depends on company to company. There is no surety, because if there is such type of surety is there, so everybody will get the IPOs, and there is no surety. Depends on numbers. It depends on the criteria decided by companies.
So it was really a wonderful session by Avinash sir. Sir has given a lot of insights from the basic understanding of financial market. Moreover, he gave us information about stock exchanges, what BSC, NSE, which some seems to be so difficult for a normal person to understand. But the kind of information, sir, you have given today, I think a lot of doubts is clear, and we could understand the way students are coming up with a question. A lot of things which is students they wanted to ask, but due to the time constraint we are not able to take it now, understanding sir engagement in further activities. So I request thank you Avinash, it was really awesome session I must say. And now
Thank you, thank you.
I request Divya to kindly give away the vote of thanks. And students, please wait for some times because we are also going to take a group photograph, right? Divya, are you here? Divya, you are there? I I believe she lost the connection. So on the behalf of just a minute. So on the behalf of S.B.PATIL Institute of Management, I would like to thank today's guest, Mr. Avinash Vikram. Sir, the time that you have given for the insights for our student is commendable. I'm really looking forward to have such more session, which is going to be more insightful, where students can come up with a lot of questions, and it is going to be more interactive, where students come across with a lot of questions. So thank you once again for the information, the insight, the knowledge that you have shared with us. So thank you. And I request all the
Thank
students
you.
to kindly turn on your camera. If it's possible, we would be taking a good group photograph. All the students are requested to kindly turn on their cameras. Students, am I audible to everyone? Yes, please turn on your cameras. We would have a lovely photograph with us, sir, because it's going to be a lifetime memory. Financial market is such a topic that is so connected with everyone, because everyone wanted to have more money, more investment. So understanding is giving us a right pathway of our funds, how to invest, where to invest. So with this, we are ending up today's session. I request all the students to kindly fill the feedback form I've shared in the link. Avinash sir, we will be soon seeing you for further more sessions from you. Thank you, sir. It was a wonderful time with you. So thank you once again, sir.
Thank you. Thank you.
Okay, thank you.
Thank you, sir.
Student, yes. Students kindly join class after, I think we will join a class around 3:25. Okay.
Okay,
Thank
ma'am.
you
Okay,
guys.
ma'am.
Thank you students.
Okay.
Thank you everyone.
Thank you, ma'am.
Thank you.